Welcome to the world of unusual options activity, where we look through options chains searching for anomalies that might be indicative of insider trading or even just sophisticated speculators that might have information that we don't. What's up, everyone? Eric here from ES Invest YouTube channel. I am an options trader by trade. I've been doing this for over 16 years now, and this is a big part of the process, actually looking for opportunities this way. And it's because options chains are actually very telling. There's a lot of details you can find, and it's because they provide a liquid, leveraged place to speculate. So very frequently when somebody has a really solid dip, or if somebody has insider information that technically is illegal for them to act upon, you'll see them turn to options markets pretty frequently. And it's for those two reasons. Now, as you all know, before we get into the weeds here, we got to start with the good old Barchart disclaimer, which is I am not part of Barchart. I enjoy creating content with them. However, I am just a normal trader like most of us. So I have no financial advice to give you. This is all for educational purposes only. Okay, so let's kind of discuss what this is. Unusual options activity comes in a lot of different forms and flavors. You can kind of look for different things as well, depending on what it is you're trying to find and what kind of anomalies you're looking to trade. Here are a couple really common ones. So abnormal options trading patterns, which I'll kind of get into a little more detail what that is. In general, you'll find expressions of it through things like really high volume relative to what you typically see. You will find maybe an expiration that otherwise was kind of dead, and all of a sudden that's where everybody is trading tons of volume in a specific expiration cycle. You can also look for really big block trades. A lot of times that will stem from an institutional position. Now, it's really important to note, this is not like the holy grail of trading options. This is way more kind of detective work that we try to assess a probabilistic scenario. Because what that means is, for example, if we see a massive large block trade come through, it's some institution that wants to put on a big position for whatever reason. That, for whatever reason part, is super important, because even if it's long calls and we think, wow, that's like super bullish, they really want this thing to go up, maybe they know something we don't, maybe they don't, maybe they have a bunch of other positions on and they're actually using this as a hedge in some capacity to reduce risk. That's the point, is you can't just look at it and take it at face value. You have to try and look a little deeper and see what you can find and kind of piece the whole thing together. The other really big interesting thing you can look for are big changes in volume, open interest, and I'll show you some ways we can look for this kind of stuff. Now, the other thing that is interesting to keep an eyeball on is implied volatility. This can be implied volatility for individual options. It could be for the entire options chain. And the reason why this matters is because market makers, people who are forecasting volatility and then baking that into an options price, they're pretty smart. And what they're doing is taking all the information that they have based on all the order flow that they're seeing, based on the options that they have out at a given point in time, and they're monitoring the market. They will update their models. And it's important because their models represent probabilistic outcomes. That's what implied volatility is. Forward-looking volatility, it's an expectation of variance over a certain time frame. So if we see implied volatility that used to be really low for an expiration cycle, and then it's super high, something's going on. We don't always know exactly what, but we know something is going on there. Same thing where a lot of times if you're looking at an options chain, you can find certain expiration cycles that have really elevated implied volatility. A lot of times it's because that's where earnings actually might be coming out pretty soon, those kinds of things. So unusual options activity essentially is when we take a baseline assessment of whatever we're looking at. Typically it's done through different scans, which Barchart has some great tools I'm going to show you in a minute to help with this process. And it looks for anomalous circumstances. So why should we care? Well, it's because there are tradable opportunities here. There's the ability to kind of ride the coattail of informed speculators, and you'll actually find a lot of research, which I'm going to pull these up so that you can take a look for yourself. I always tell people you shouldn't take my word for anything. Anything that somebody says in these capacities, you should be able to assess for yourself and come to a similar conclusion. And that's kind of the point of these different studies for you, because it highlights the propensity for what kind of transactions we see from inside options trades or just informed trading. You can find positive correlation to takeover announcements. You can find the frequencies that insiders use insider information and they leverage that through derivatives. You can find how informative option pricing is for future returns. So you can poke through these and kind of see what you come up with, but there's an entire breadth of research out there on using derivatives for this kind of thing. So now that we understand that there's an opportunity of sorts here, let's talk about how we can use it. Now, the way I look at this is these are very speculative trades. It's similar where we're kind of piecing together breadcrumbs and we don't know with certainty if something means big trade comes through and if that means that is bullish, bearish. You can come up with some ideas. So here are some really basic starting principles you can employ. Looking for a really big volume that is anomalous, looking for really high open interest changes. These things have to be taken in context though. So for example, unusual volume could just be people exiting positions because they're in profit or because we're coming up on an expiration cycle. Or if you're looking at options on futures, it could be that we're just rolling out into the next period. Same thing for big changes in open interest. You'll kind of see that happen a lot in front month expirations. But sometimes you'll also see a ton of opening trades in front month expirations, and that could be people speculating. So it's a nuanced skill set. And again, Barchart has some really cool things to help us start this process. So on the options tab here, you can look for a lot of different things, which is actually really cool. If we start here with unusual options activity, one of my favorite scans to start with is volume over open interest. And this is because you have the opportunity to then decipher maybe something that was relatively quiet not too long ago, but then for some reason has become exceedingly active. And that's actually happening right here in WULF. The previous open interest was 125 contracts. The volume for today was 11,415. Massive volume today relative to the open interest. Now, there are different ways you can decipher if the volume is either buying at the offer or selling at the bid, which is important because that tells us how we're opening the trade. Are we buying to open or selling to open? If you buy to open a call, typically we assume that that's a bullish position. And if you're selling to open, it's a bearish position. Another important piece of detail that we can decipher is what is the probability that we're seeing volume that's establishing new positions, whether it's buying to open or selling to open, but then also what are we doing with existing positions? Because if we look at an example, this is a good one, 65,000 volume against 1185 OI. We don't inherently know how much of this 65,000 volume is establishing new positions versus closing out existing ones. But again, if we apply that same methodology, let's pretend 1,185 of these volume traded today were closing out all of the existing positions, which is low probability. That still means that there's massive opening trade volume again, and that can be broken down either into selling to open or buying to open. For that, we would see if we transacted at the bid or the ask and then make an inference. For things that are transacting closer to the midpoint, you can't really tell, but you can still get some ideas if something is transacting closer to the bid or closer to the offer. So let's take a look at what that looks like. If we pop over here now, and for TeraWolf, all I did was go down here to time and sales, and I'm grabbing the details from this. So we know that the 6 calls expiring in 19 July saw a lot of activity today. So what happened? Well, we can see a big order that got pushed through at 1041. We see that 11,250 all came through at once. and the trade price was at 38 cents. The bid was 30 and the offer was 40. So we can make a pretty good inference here that we're transacting much closer to the offer than the bid. So this is a really interesting thing that you can kind of start right away, very simply. You can also have it automatically shoot you an email with the specific criteria that you're interested in seeing. But this is one that I recommend just start looking at. Whether or not you trade off of it's completely different, but it is really interesting and it's also highly informative. Even if it's something that you don't put a trade on, you can still learn a lot about a company, especially something like P10. If we see this kind of huge volume and you're like, these are 51 days out, that's really interesting. And there's a lot of puts. So what's going on here? And you might learn something that you want to put a position on, or you might just learn something about that company that could be interesting for another thesis further down the line. So unusual options activity is actually super informative. There's a lot you can glean from it to integrate into your trading. As always, if you have any questions, throw them in the comments. Be an outlier. We'll see you guys later.